I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Tim Cyclesman Wood, editor of Cycles News and Views on Cyclesman.com. Welcome back to the show, Tim.
Jim, as always, thanks for having me.
The Japanese central bank is snapping up all the Japanese government bonds. They're now the biggest shareholder of Japan's 50 biggest companies. Is this a trend we're seeing worldwide, and how is it affecting the equity markets?
Well, I think it is a trend we're seeing worldwide, and it's interesting you bring that up because I had actually a friend of mine send me an email and a link. He wanted me to watch a video about this very sort of thing, and the guy that did the video was well done, and he was talking about how many of the so-called experts, talking about, technicians and savvy investors have been, quite frankly, just wrong about this bubble. And he did acknowledge that it's a bubble, said it's the greatest bubble of all time, which I agree, and yet because based on the fact that we've never seen anything like this, that, there's been so many people wrong about it. They recognized it for what it was, the abnormality that it is, and it just keeps going. And so, yes, that kind of thing, I'm hearing the same stories. The central bank intervention is I think, responsible for this bubble. And, we all know how it ends. But the question is when. And, I'm telling my subscribers, the single most important thing, because they've skewed all of the statistics and, extended and distorted cycles. The cycles are still there. They're extremely, what I'd call right translated, if you will, and extended. But the one thing they cannot negate, there's one thing, and this is an absolute 100%. It's not subjective. It is an absolute, as sure as the sun rises in the east and sets in the west. They cannot negate a Dow theory primary bearish trend change. I don't know when that happens. Maybe it happens tomorrow. Maybe it happens 6 months from now. Maybe it's 2 years from now. But that will not be negated with this top. And so until then, I guess anything's possible.
Now, some of the people I've talked to have said what they're seeing right now, if you look back in recent history in 2015, when we had Black August 25th, a massive correction then, are we setting up for the same kind of thing again?
Look, I see some stuff cyclically. We're at a critical juncture. Let me answer it that way let me say this. I've been saying in the letter, you're getting the letter, I've said in the last couple of letters, that there is some statistical and cyclical junctures just ahead. And I've also said that depending on how the market digests that juncture, it's either going to be a 1927 style scenario, which coincides with what the guy in the video was saying about it being a melt up yet to come, and that the bubble was not over, or the market's not going to digest these statistical hurdles well, and then it's going to be more like a 1929 style, which I think would, equate to your 1987 scenario. So, you go through these technical windows of opportunity or junctures or intersections or whatever you want to call them, and yes, we're at one now. Absolutely. We were expecting some cycle tops in equities and commodities, gold, oil included, we've seen that decline in oil and gold. The gold stocks, obviously, I don't know if anyone looking at the oil-related stocks, that they've been hit pretty hard. But equities is, they're lingering. They're holding out. They're just treading water here. Looking at a chart, I mean, we've been flat for, 6-7 weeks. And the question really is are commodities going to be able to heal from the correction, or are they leading and equities are going to follow? And that's kind of what we're waiting on the evidence, the technical evidence to see.
We'll have more with Tim Cyclesman Wood right after the break.
I'm Bill McWilliam, president of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
Gem International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. Gem International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
Welcome back. We're speaking with Tim Wood. Tim, can we just take a look specifically at oil right now? Again, people are wondering, it's in the upper $40 range. Is it in danger of falling into the 30s?
Yeah, yes, it is. Commodities, we talked about extending and distorting the cycles, and, you have to go with, how do I say this? You have to go with the statistical expectation until that statistical expectation is proven to be wrong. And as commodities bounced, everything bounced out of the early January 2016. I say early 2016, January, February lows. Commodities, I think gold made the low in December of 15. But everything, equities, everything bounced out of that low and then moved into the recent highs. And as we moved into January of this year, we knew that that oil was at or near some major cycle tops and that it should decline and retest the previous low. It took, I'm looking at the chart, took 2 months. Oil just kind of flatlined, and then it kind of broke, and then it retested, and it's broken more recently down. And as of this interview, yes, I realize a short-term bounce is going on. We were expecting that this week, coming into this week. Mentioned that in the newsletter this last weekend, even ahead of the bounce. But overall, I think it's a counter-trend bounce, and the expectation of lower oil prices is still on the table because there's been nothing to invalidate that expectation. So, yes, I think that I'm still looking lower in oil and gold as well.
With gold, are people holding on to it too long? Or should they be buying shares? Should they be looking at bullion? What kind of strategy should they have?
Look, I see a tremendous opportunity with gold. And, I've been called a gold hater. That's kind of comical, because I call what I see, and, to be a hater because you see something that's going down is kind of funny. But I actually see a tremendous opportunity with gold after we get proof of either that we have seen some sort of a little bit different 9-year cycle low, or we get that final push down into the 9-year cycle low. And my thinking is that the best way to participate in that, of course, bullion is good, the physical bullion, or futures or options or whatever. But my thinking is gold stocks. I think there's going to be a tremendous opportunity in gold stocks once we can establish that 9-year cycle low has been seen. And again, based on the cyclical and statistical expectations, we're still looking for that additional push back down. And until it proves that, hey, okay, we have seen the low, then, I have to stand by the statistic. It served me well so far.
We'll have more with Tim Wood right after this.
Lotus Ventures Inc. is a BC-based medical marijuana company poised to launch into the rapidly evolving cannabis sector. Lotus is in the final review stage of the Health Canada approvals to become a licensed producer, having arranged facility financing of up to $12 million, plus building permits for its prototype indoor production facility. Shares trade under the symbol J on the Canadian Securities Exchange. Visit our website at lotusventures.ca.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're chatting with Tim Cyclesman Wood. Tim, the NASDAQ and the S&P 500 hit record levels recently, and since then, a slight decline. Is this going to be a slow decay where perhaps people don't even really notice that the markets are slowly sliding down instead of one big drop that would get everybody's attention?
I don't know. I think that it depends on the structural setup that occurs once the top actually happens. But I will say this. My inclination is that no one is going to have an opportunity to short it. No one's going to believe that the top was in once the top is in. I think it's going to be because, Pavlov's dog has been well trained now for years to buy the dip, and no one's going to believe anything once it sets up. I even question if this may be such a sneaky setup that we may not even see a Dow theory non-confirmation at the top. That's absolutely possible. It's only happened one other time in history, but it's happened. And it happened at the 29 top. Now, don't confuse that. Let me make sure people are hearing what I'm saying. I did not say that a Dow theory primary bearish trend change did not occur at the 29 top, because it did. William Peter Hamilton called that top with that primary bearish trend change in print. In the Wall Street Journal, by the way. But a non-confirmation ahead of that, the warning ahead of that, did not occur in 29. And, as crazy as this market has been, it wouldn't surprise me a bit that we see something like that, to where there is very little warning and the complacency and so forth, and then you wake up one day and it's on. It's kind of what I'm thinking. But, do I know? Obviously not. But I do know that it's a bubble. It was a bubble yesterday. It's going to be a bubble tomorrow, and it ultimately is not going to end well. But do I have anything now? No. We need to see that primary bearish trend change before we can say that it's run its course.
Is this a very confusing time for investors?
Yes, I'm sure it is. I talked to the guy that sent me the video today, and asked me to watch it about them talking about it being a bubble and a melt up still on the way. And he asked me, what I thought. So I patiently listened to it. And, I'm open to any kind of information. It's all data, and you digest it and you walk away with something. We all learn something. And I looked at it and I'm like, the guy was 100% right in the video. He said it's the largest bubble in stock market history. He talked about how savvy investors had been, gotten out too early or just simply left on the side, and how the experts, and I guess I have to include myself in that, I'm on here doing an interview with you about the market, but how it's been, the market has just rocketed up in spite of, what, people's foresight or prior knowledge of the market, and it's just made a lot of people look wrong. And again, it's not an excuse. It is what it is. It's because of the intervention like you talked about. So we don't know how long, that's the hard thing. We don't know how long this bubble is going to go. So yes, it's caused confusion. And the point with this guy was, he said, look, I got money on the side. He said, I don't really know what to do. And I told him, I said, I don't know that I want to tell you because he's a friend. I don't know that I want to tell you what to do, but I said, here's what I know. And I told him the same thing that I tell my subscribers, and I'll say here on the air. The one thing that I can assure is that we will see a primary bearish trend change. I don't know when that's going to happen. So do we get a melt up here and this thing goes in the 1920, say this is 1927 scenario like I talked about, then and we get the melt up, then hey, if you're on board, great. If you're not, then that's probably going to suck that you didn't take advantage of the opportunity. So yes, it is a tremendously confusing time for anyone who is aware. The people that are just blindly in the market and know nothing have actually been better off because they didn't realize the danger of the situation, if that makes sense. And so they have actually been in a much better position in this market than anyone who was, aware of any kind of market history and done any sort of analysis.
Would people be in a good position to do the old sell in May strategy and then wait and see what happens?
I don't. That's not something I don't subscribe to that. I've never done any research on that effect, so I really can't speak statistically about if there's even any merit to that. I don't know. Like I said, it's not exactly what I do, but looking at the cycles, I do see that we're at a critical point, and covering it in the letter as it develops, and depending on which way that mop flops, I have said for 2 months now that I do see the potential for the melt up, and I do see the potential to hit the brick wall. It's just the jury is still out.
The term melt up, I've heard of meltdowns. What's a melt up?
The melt up is just the opposite. It's like the panic buying. The people, they see the market going up and up and up and up. It's just a parabolic advance. And, from my perspective, looking at the chart, I mean, it's that's the problem. It looks parabolic now, but does that mean that it can't become more parabolic? Of course not. It does not. And so that's all it's referring to is the parabolic advance.
It's sort of like what we saw with Vancouver real estate. People rushing out. If I don't buy a house now, I'll never get one. Whereas the houses are still there and the prices have come down.
Yep. And the thing is, it reminds me, another example of what you're saying back during the housing bubble in 2006 and 2007. I remember, and I may have told this story before. I don't know. Apologize if I have, but living on the Gulf Coast, there were real estate agents, and I've heard them talk about this. They said that people would call in, they'd say, I got a 2-bedroom, whatever, condo in this complex, Phoenix, whatever, blah, 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 and someone would say sold. And they said it was literally nuts the way that the real estate was selling, and people justified it in their mind, just like you said. And then it cracked and crashed, and oh my God, was that ugly. But it's the same thing. You look back at, like we've talked about it before, and I've written about it, and the sugar bubble, where back in the late 60s, sugar advanced 6,600%, I think, over the course of, 2 years or whatever it was, and people justified it. That's what we do as individuals. We try to justify what we see. And in looking at the parabolic nature of this market, people are trying to justify that it's somehow normal and okay. And what I'm saying is, I'm not trying to justify my position by no means. It is a bubble. I don't think that's undeniable, but it's not normal is the point. And you can't justify a parabolic advance like that. It's unsustainable. How long it goes, I don't know, until we get a primary bearish trend change is the next opportunity for it to pop. But it is an abnormality is the point.
Tim, thank you so much for chatting with us.
Thank you.
My guest has been Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. You're listening to HowStreet.com Radio. Our YouTube channel is Talk Digital Network. If you have any questions for the show or for our guests, you can send them to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com Radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com Radio is a production of HowStreet Media Incorporated.